Ladies and gentlemen, good day, and welcome to the Q3 FY23 earnings conference call of Focus Lighting and Fixtures Limited, hosted by Kirin Advisors. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vastupal Shah from Kirin Advisors. Thank you, and over to you.
Thank you. Good morning, everyone. I would like to welcome Mr. Amit Seth, Managing Director of Focus Lighting and Fixtures Limited, Mr. Tarun Udeshi, Chief Financial Officer of the company. As this is the first call of the company, we will have brief introduction about the business model of the company, then Q3 highlights, and followed by the Q&A. Now I hand over call to Mr. Amit Seth for the brief introduction about the company. Mr. Amit, over to you, sir.
Thank you very much, Mr. Vastupala. Very good morning to everybody. This is our first conference call with investor community. I extend my warm welcome to all of you. The call is to discuss our performance for Q3 FY23 and 9 months FY23. Before we discuss the performance in the reported quarter, I would like to give you a brief introduction about Focus Lighting and Fixtures Limited. We established our company in 2005, wherein we established as a retail lighting company. But before 2005, we were traders. We were ex-partners with German company called Concall. And after that, we realized that the market is very big, and either it is very expensive product from European market or it is a very, very poor quality from China. So in 2005, we started a private limited company, and we decided that we will get some innovative technologies from European market, try and manufacture in India, and look into the retail industry only. Between 2005 and 2015, we were only focused on retail lighting industry, and we became one of the leaders in this industry, catering to only retail. Retail, when we talk about, we do brands like Shoppers Stop, Future Group, Reliance, mainly departmental stores, fashion stores, jewelry stores. This was our core competency. Value what we added was we got not only the technology, but we got product designing done from Germany. We hired 2 designers who worked exclusively for Focus Lighting. They were working initially for some German companies and Swiss companies, and then they started exclusively working with us. In 2016, we decided to diversify into home lighting, and that's how we again started hunting for some technologies in Europe, and we realized that there's not only a lot of gaps in the industry, but we realized that there are a lot of technologies, innovative technologies, which can be introduced for home lighting in particular. So we got some patented technologies where we pay a license fee and we pay royalty to them, and we got exclusivity for Indian market. That's how we started manufacturing for home vertical. The company currently manufactures in an area of 80,000 square feet and produces roughly 1,500 fixtures per day. After that, we realized that there is a huge business in railways, and we got approval from ICF, MCF, and RCF. We have 16 products as of now approved. Currently, we are a development source for railways, and by May, we will be an approved source. So when we are a developed source, we don't get more than 20% of the business. Once we are approved source, the business we can get is up to 80 to 90%. We also ventured in 2022 for infrastructure lighting, and infrastructure lighting, when I talk about, we do airports, temples, landscape lighting, facade lighting. This is something what we do in infrastructure lighting. We were able to do some of the marquee projects like Kundarpur project. It is one of the largest temple for Jain Digambar in Madhya Pradesh. It is called Bade Baba Temple, Lord Adinath Temple, Jain Temple. The project value was 15.5 crores. We were the only company in India to back Delhi Airport project. This project was 100% was given to a German company. They were not able to execute it. And then GMR came to us, and through GMR, L&T placed an order worth 13 crore rupees for Delhi indoor lighting. It also comes under infra projects. There are a lot of projects in infra which we are working and which we will see results in coming 1 year to 2 years time. Recently, the company has now ventured into outdoor lighting. We were predominantly indoor lighting company. So we started with retail lighting, then we went to home lighting. Infra was more of a trading. But now we have an aspiration that we will be developing infrastructure lighting in-house, and also outdoor lighting. So we are getting some of the innovative technologies for outdoor lighting, wherein we can cater to the outdoor requirements in the country. Again, there is a gap. There are either very high-end German companies who are exorbitantly expensive, or there are Chinese companies which are not at all reliable. So outdoor is something we find a huge gap, and that is the industry where we are investing for coming years very heavily. We have other 3 subsidiaries, plus Lightech FZE, which is based in UAE, Dubai. Focus Lighting and Fixtures PT, which is based in Singapore. Focus Lighting Corporation in Delaware, which is based in USA. We have pioneered in developing sustainable lighting concepts beyond current trends. Our standard 5 years warranty for all the products has the promise of efficiency. Now let me take you through the financial performance of the company for Q3 FY23 and 9 months FY23. Consolidate key finances at a glance. Our total income for Q3 FY23 was 61.31 crores. It is up by 137%. EBITDA is at 15.3 crores. It is up by 438%. PAT has come to 11.35 crores. It is up by 759%. EPS right now is 11.2, up by 761% roughly. Total income at 128.85 crores, up by 81.35%. Revenue from manufacturing activities contributed to 86.6 crores against 39.72 crores 9 months FY22. Revenue from trading activities contributed to 14.09 against 13.61 in 9 months FY22. EBITDA at 26.88 crores. EBITDA is up by 434%. PBIT from manufacturing activity contributed to 20.57 crores against 1.97 crores in 9 months FY22. PBIT from trading activity contributed to 3.2 crores against 0.58 crores in 9 months FY22. PAT at 18.9 crores, up by 1,336%. EPS at 17.94, up by 1,370%. That's from my side. Any further questions if you have, what we are working on, where we are diversifying, whatever, I'm open for it.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question from the line of Raj from Arjav Partners. Please go ahead.
Right, am I audible?
Sir, your audio is too low. I would request you to increase your volume.
Now it is good. Can you hear me?
Yes, please
So,
proceed.
wanted to know how do you think FY24 is looking?
See, as I told you, we were predominantly a retail lighting company, and we diversified into various verticals. Okay. And typically what we see is the real jump is coming in infrastructure lighting. Infrastructure, railway, and outdoor are the three areas where we are focusing very hard and where the profitability is improving. And if there is infrastructure growth in our company, we bound to grow leaps and bounds. There is no question that we'll stay behind. There are roughly 24 airports which are coming up in India. There are 30 roughly railway stations which are either refurbished or they are going to be new. Bullet train is coming in a big way in India, which we all know the work is going at a very fast speed. So these are all infra projects. Then there is SBUT, Statue of Oneness. These are all very, very large projects for companies like us. And single order is equivalent to 30 to 50% of the turnover. But as I told, infra projects, it takes a lot of time. So it's not like because we start working with them when they start the designing, then the construction happens, then the execution happens. So those business will come, but which year it comes, we are not sure. But overall, we don't see any issues and any problem for coming 5 years time.
Okay. And looking at the expansion which you are doing into and everything, so how much of investment would we need? Incremental investment, if you can just comment on it.
Please understand that we have already, as I told you, my opening speech also, that we have a manufacturing facility of 80,000 square feet. Out of that, we are currently utilizing only 40,000 square feet of the factory. Yeah, so we have a spare manufacturing facility. We invested in last 4 years in R&D, in laboratory, and in manufacturing. These are the three areas where we need to invest. And those investments are already done. So now what we are investing is only on product design and tooling, which is not turning to a very, very large investment. So till infrastructure is concerned, we already have it in place. We are just investing on new product lines.
Understood. And how much is the cash as on Q3 end? If you can just tell me.
Sorry, come again.
How much of the cash we have in the books as on Q3 end?
I think that Tarun can reply on it.
Yeah, hello. Hi, good morning.
Yeah, good morning.
You need to know the current bank balance.
Yes.
Sorry. 1 second.
So currently we are a debt-free company. Yeah, we are not utilizing any CC limit right now from the bank. Yeah, but what are the cash you mean to say reserves what we have?
40 lakhs.
You mean to say the cash and bank balance what we have with the bank. This is what you are trying to say? Yeah. 1 second. Because this time what we have done is we just published the profit and loss account. Balance sheet is not published. 1 second. Still I can forward it to you. But just give me a minute.
All right, I'll wait.
Yeah, till that time we can go to another.
Yeah. Anyway, okay. Anyway, thanks, and it's happening to see you are doing earnings call. Thanks. Have a good day. Bye.
Thank you.
Thank you.
Thank you, sir. The next question is from the line of Vivek Gautam from GS Investment. Please go ahead.
Yes, congratulations on good numbers and the good growth shown by you. So is it sustainable, number one? And number two, you have come with an SME IPO and a small IPO and 5 crore IPO, and then you have come to the main board. And but we went through some very bad times also, and What were the reasons for that, and have we recovered totally from those that time? And how is the future looking like? Railway seems to be one of the major focus area for us, and hopefully any RDSO affiliation or approval have we done so? Because that seems to be a very tedious and time-consuming process at RDSO Lucknow. Yeah.
Okay, so I'll answer step by step. So our peak was 2019, which was our peak, and we registered 110 crores, and we had a PAT of roughly 9 or 10%. I don't remember exactly. And COVID it had affected us very badly. In my career, I've never seen our company degrowing or balance sheet going in red, but we struggled for 2 years, and we struggled very badly. And we struggle mainly because we are into project business, we are into retail business. Retail today also contributes to roughly 52% of our turnovers. So retail is certainly very big for us, which up to 2019 was somewhere around 70 to 80% of our turnovers. Okay, but this last 3 years has given us a lot of learnings, and reason what you see this growth is because we didn't keep ourselves silent, and what we did was we aggressively went on investing on other areas, other verticals. See, lighting is a very big industry. It is mainly divided into indoor and outdoor. In indoor, it is office lighting, retail lighting, home lighting. In outdoor, it is street lighting, infrastructure lighting, landscape lighting. A lot of things are there, underwater lighting. So there are a lot of verticals, and each vertical has a lot of potential to reach to certain turnovers. What we are targeting today, we have 7 verticals. Okay, retail, home, railway, infrastructure, IoT, and trade. So all these verticals, they have a potential that what we foresee is that each individual vertical can go up to 100 crores. So there is enough growth which company can see in near future, and there is enough potential in the industry what we foresee. Out of that, as you rightly said, there are 2 areas which we are really banking. One is railways, and one is infrastructure lighting. Now, when I come to railways, as per railway norms, now we don't have to go to RDSO. We need approval from ICF, MCF, and RCF, which we already have. We are already a registered vendor. It was 4 or 5 years back where every product has to be tested by RDSO Lucknow. And once RDSO approves it, then only you can supply it to railway. That they have taken, for lighting they have taken out. In fact, today in railways, what we are doing is we are developing, railway has got existing systems which we manufacture, we design and manufacture it. Now we are giving them new technologies, which are patented technology. Railway wants to showcase, like if you see Vande Bharat, Vande Bharat has been a very big hit in India, and they really want to showcase that Indian Railways is at par with any international railways, like Germany, in Europe you have IC. So they really want to push to that level. So currently what we are doing is not only supplying their existing product, but we are developing some patented technology where we are supposed to get absolute monopoly, and that is what we are eyeing for. So this is regarding it. What was your third question? Whether we can sustain this growth?
Yeah.
Sustainability of growth and profitability will certainly. In fact, we are looking for higher PAT. Okay, a lot of people from the industry is asking that whether we can sustain this type of PAT. So one thing we need to understand is till companies like Focus is concerned, we request investors not to see every quarter, but to see yearly results. Okay, I know it's a mentality that we see quarter to quarter, and the expectation goes higher every quarter. But what we are looking, because we are into infra business right now, we are focusing very hard, and those projects, which quarter it realizes, we don't know. Okay, we work for 2 years, and on the third year, first quarter or the second quarter, that business gets realized. So that quarter becomes very, very strong. So what we are looking for is an average growth, whether we can sustain a growth of 30 to 50%. To answer that question, yes, it is possible. Whether we can sustain profitability PAT of somewhere between 10 to 15%, yes. In fact, we are looking for a better profitability and better PAT for coming years because the investment is going in those directions in areas where the PAT can be much, much better than this also. Yeah. Any other questions you had?
Yeah, the competition, if you can say something, because how severe is the competition for it? Or I have heard that certain retail stores, our quality was much better, that even the Philips was not able to match it earlier. And they had gone in for us and they are quite satisfied. And how is the thing looking like now? And any slowdown in the consumption phase post-COVID pent-up demand, is it impacting us in the retail space?
No, there is a retail boom in the country and we don't see slowdown coming as of now. Number one. Number two, today market leaders like Reliance, for example, they are ready to invest on technology, which is a big boost for companies like us. We are a technology company. Okay, and as you rightly said, Philips, when they go to the industry, they say that we can match quality of focus, which we say it with great pride. We invest heavily on technology. Until competition is concerned, there is no industry where you don't have competition. But again, if you have an edge in terms of technology, if you have an edge in terms of patents, so we are using technologies which are patented. We are investing very heavily on technologies which industry is not going to bring it. Now, why India typically, if you go to see, India is a trading hub till lighting is concerned. Most of the companies you will see either buying from China or either they are buying it from Europe, and these companies, they just either they white label it and they sell it in their brand, or they just sell it in European brands directly because it's a big brand in Europe. Where we see ourselves is that we are bringing those technologies in India, manufacturing it, adding value to it, reducing the cost for the end user or for the consumer, and that's where we are getting our business, that's where we are getting our growth. So in this industry, there are companies who will copy us. Okay, there will be cheap copies where we cannot do anything because the norms are not very strong in India. But again, it's not possible to copy those technologies. So we don't see much of a problem till retail is concerned or till infrastructure is concerned. And I think there's a market for everything. Okay, we as a company, we are in a niche market. We are in a market where companies, consultants, they understand technicality and they love to work with us. They want to have 5 to 10 years, hassle-free, no tension that, okay, what will happen if something goes wrong, if something blows up. Without light, things don't work. Where humans are, there is light. And today, the biggest challenge in our industry is sustainability. We give warranties and guarantee for 5 years. And to have those type of warranties and guarantees is a big challenge in our industry. Today, Philips, Havells, Cisco, they are giving guarantee of 1 year and 2 years because they know that the product don't last for long. Today, we give extended warranty up to 8 years. Why we give extended warranty? Because we are sure that our base is very strong, our quality is very strong. So in our business, we don't see much of competition. There will be cheap copies, which will always happen. There will be some share of market which will be taken by unorganized industry, but it is not affecting us. In fact, it is making us stronger, other way around.
Yeah, congratulations, and sir, just a few words on the clients you have, and the Kundalpur win was a very good win. And how is the opportunity size in this particular temple? There are a host of Jain temples all over India, and not only Jain temple, other temples also. So, are we targeting them?
Kundalpur was a learning for us. Typically, when we started retail lighting, we were traders. We learned as a trader in terms of quality, workmanship, technicality, and then we started manufacturing it. So here also the idea is that in this Kundalpur we consider as an infrastructure lighting. Kundalpur was a big learning for us, not only in terms of value, but also in terms of how infrastructure lighting works, what are the key areas we have to work on, what are the things we have to take care of it. And this really, we got experience from a European brand which has got 50 years of experience. We could download it in 2 years' time. And our goal is that we will slowly and steadily invest on that and manufacture it in India. To answer your second question, there are a lot of forts, temples, which have been highlighted because of this Modi government. They really want to increase the tourism in this country, and they want to any places of worship or any places which have got importance, from Taj Mahal to Qutub Minar. They all want it has to be a revenue generation for them, and for that lighting plays a key role. So we are working very hard on this area, and this is where the big turnovers are coming from, which you will see today and in near future also.
And lastly, you got some about the clients you have. Reliance is your client. Shoppers Stop, I believe, has been a very old client of yours and very satisfied client. Who else?
Today we have clients like GMR, GBK, L&T, Reliance, Railways, then Bombardier, just to name a few. Retail, you name a brand, we are working with retail brands, from Tata Motors to we do Audi, Volkswagen, Volvo, Mercedes-Benz. Mercedes, we are approved in Middle East also now, and we are looking that we'll be approved in future for European market also. We are working with IKEA. IKEA, we are the sole vendor in India, and now we are approved for Middle East. We'll be getting some revenue out from Middle East market. What we are foreseeing is that in near future, we will be approved for Southeast Asia and for Latin America also, which is a large chunk of business from IKEA which will come to us. We are approved by a Japanese brand, and we are exclusive supplier in India, and we are working very hard to get ourselves approved. We are creating an infrastructure that we can at least serve them in Southeast Asia, because in India they open 4 stores every year. Our turnover may be somewhere around 2 to 3 crore rupees. But in Southeast Asia itself, we are looking for a revenue of 50 to 100 crore only from one single brand, like IKEA or Uniqlo. So this is how retail works, and it becomes very interesting when you go global. So yeah, these are the brands we work with day in and day out.
And lastly, about yourself, sir, you are basically in the lighting business for the 2nd generation or 3rd generation, started from the overall market, if I remember correctly, and now have really evolved over a period of time. And how has been the experience so far, and how the opportunities are looking like?
So till my career goes, I started my career from Loachal. We had a retail shop in Loachal. We were selling electrical appliances, so from ovens to refrigerators to cooking range, gas stoves. This was the main line of business. This is how I started. This was my family business. We entered into office lighting, I think, in 98, and 2001 I started this retail lighting business, which started accidentally, and from 2001 I was focusing on this vertical of retail lighting. It started becoming big, and 2005 then I started the own company. So this is actually, you can say, it's a 1st generation business. It's not a 2nd generation or 3rd generation business.
And what was the Shantilal company having the role in your organization?
Shantilal, so that was a family business. As I told you that we had a shop in Loachal, and Shantilal was a manufacturing facility which we had in Kandivali. And we were initially manufacturing water filter candles, and then we were manufacturing diamond assorting lamps. We were serving diamond industry. And then the company had shut down because my father was not well. He had a paralytic attack. And after that, I think we took that factory in hand in somewhere between, I don't recollect the exact year, but probably in 2011 or 2012, we would have taken that factory in hand. We revived that factory. We started that factory again. And right now the factory has got no existence. It has been merged with Focus Lighting. So it's a fully owned subsidiary of Focus Lighting.
Okay, sir. Thanks a lot. Keep up the good work.
Thank you.
Thank you. The next question is from the line of Sahil Sharma from SS Capital. Please go ahead.
Hi, sir. Congratulations on a great set of numbers. One thing I wanted to understand is you've talked about design-led thinking, innovation, coming up with efficient LED solution, and various certifications that we have in your investor presentation. Can you talk about what are the competitive advantages or any kind of know-how, technical know-how that we have developed, and why it might be difficult for other companies to compete with us? For example, you also mentioned that Philips talks about matching focus with quality. So yeah, basically, what are we doing uniquely that makes it difficult for other companies to compete with us, especially on quality?
See, there are two areas in lighting. Okay, when any buyer wants to buy lighting, okay, he has to look into two areas. One is safety, which is of prime importance, and second is performance. Okay, so till safety is concerned, all the large projects, they require certain certifications to ensure that there is no fire. If there is fire, okay, the lights are not spreading fire. Okay, if an installer is installing the lights, he is not getting electrical shock. I'm talking in a very simple language so that you can understand it. Okay, now this is a huge gap, and this certification comes at a very, very expensive price. There are international certificates like ENEC in Europe or VDE in Europe, CB, which are required, and every country has got specified certification. In India, now we have BIS. Okay, so what we had done is we have heavily invested on a laboratory which is NABL accredited. Now you can say there are only 5 or 6 NABL accredited labs in lighting industry. I don't know the exact figure, but this is what I'm assuming. We are one among them. Now we don't have to go till certain certification to an external agency. We can self-certify it, and this is approved worldwide, which is a big advantage with us. Okay, that means that if somebody is buying our product, it is safe to use it. And reason why this all of a sudden infra growth what we got is because we could show it to, like, L&T came to our factory, GMR people came to our factory. Because airport is a huge, there are a lot of compliances we have to do it for when you're supplying for airport. It is not just you have developed something and you are supplying it. There are a lot of testing, a lot of certifications required, and they were very happy to work with us because we had this infrastructure. Now this infrastructure in our industry, nobody has it. Okay, with our size of company. And that was our first vision what we had, that if you have to really grow in infrastructure where the volumes are very large, we need to have lab in-house. And also we have international certifications like CB, SAZO, KUKA. So these are entry barriers to do business outside India. Like if you want to, for example, if you want to do business in Saudi, you need SAZO. If you don't have SAZO certification, you cannot do business. If you have a product of gold also, but you don't have this certificate, that certification takes 1.5 years. So the competition is less. And these are already in place with us, and we are doing business with, we are doing a lot of exports. 20% of our revenue comes from export, which we expect that it will grow over a period of year on year by at least by 20 to 30%. Second, where we come into is the efficiency part. Energy is a big cost worldwide. Okay, and energy replacement, these are all related to efficiency and durability. So whenever a client is working with us, we always show that there is at least 30 to 40% saving on the energy cost. The client might be spending more with us, but there is a lot of saving on that, which becomes very big when it comes to infrastructure, which becomes very big when it comes to retail, but not for home lighting. third area where we have worked very hard is look and feel of technical lighting. Technical lighting is not something where people like to see it. Decorative is something you like to see it. But in technical lighting, how we can make it minimalistic or rather invisible is something we have worked. We are the first company who has got Red Dot Design Award, German Design Award with us. This is only on the how the aesthetically the product looks and what are the technical features what we have added. We have got this award for. So we have opened a market which was for European market for us in this country, and that is how we are getting a sort of a monopoly here. Sorry, I hope I could answer your question, or you had some other questions in.
Yes, sir. Just one quick follow-up on this. You talked about 30 to 40% cost saving. Is this compared to non-LED solutions or other LED brands, or what is the baseline here for cost saving?
See, cost saving is whether you're working with the Europe. It's first of all it is with LED to LED. And when we say LED to LED, we are not only comparing it with the other brands which are either from Europe or from China or from India, but any brand we very proudly say that there will be a considerable saving when you're working with Focus.
Right, sir. So what you're telling us is that in general, if a client goes with Focus LED lights, they might save 30 to 40% of the running costs.
Yeah.
Okay. Thanks, sir. My next question is, in general, in these specific segments which appear attractive to us, which is railway, outdoor, and infra lighting, what are some of the other companies or brands that we compete with, and especially ones which we sort of either respect or that we see might be outbidding us or sort of be able to win against us that we see? Just a few names if you might know about them.
Sorry, can you repeat the question?
Yes, sir. What I was asking is that especially in these railway infrastructure and outdoor lighting segments, what are the other companies with which we compete who might win these projects if we don't win them? Like, who are the competitors for us in these segments?
Okay, sure. So, competition is everywhere. We never say that there is an absolute monopoly in the industry, and competition is always healthy for the companies to grow. If there is no competition, the growth will be restricted. When it comes to railway, what we foresee is that there are all put together 13 to 14 companies who are working with railways till lighting is concerned. But none of the companies have all the requirements fulfilled for railway number one. So either some companies are working for 2 or 3 products, others are working for another 2 or 3 products. But we are the only one who has got 16 or 19 products approved from railways and developing more and more day in and day out because we can do development enough. So that is one strength what we have. Second thing is consistency in the railway is a big challenge for railway itself. Consistency, when I say consistency in terms of quality. And railways are looking for good vendors who can give consistent quality for a long period of time. Most of the companies dealing with railway, they are all unorganized players. They are not organized players. We can say there are only 1 or 2 organized players. So that way we see that the competition is very less. That is also one more important thing. Third is demand and supply. Today, railway, the growth what railway has, railway is the only vertical or industry where demand is more and supply is not there. Railway is bleeding. Railway production becomes slower when the supply does not happen. Please understand, one small component, if not supplied, they cannot issue a bogie or they cannot get the train out. Okay. Same thing is with lighting. If one compartment is dark, you cannot bring it out. So that's where we come in, and that's where we see a huge potential. Railway was surviving without Focus for all this year. But there is a potential that with our service, with our supply, with our manufacturing capacity, with the quality consistency what we can have a very large business in railway. Coming to infrastructure and outdoor lighting, as you said, what we see is it's very haphazard in India right now. Infra, there are some large European companies which are doing business. Like infra also, there are a lot of areas in infra. For example, you do facade lighting, you do 3D projection. I'm not getting into depth of it because you guys will not understand it. It becomes quite boring in this dais. So where we see ourselves is that today Make in India is becoming very strong. Now when Make in India is becoming very strong, we know we don't have resources in our country. We don't have very high quality manufacturing in our country. So that's why we are coming in when it comes to infrastructure or outdoor lighting. So I keep repeating in all my interviews that either it is European countries who is getting business in India, or it is China. Now China, there is no reliability. Europe is very expensive, and there is in center there is a big market, okay, which is open. If you can give European quality, not at a Chinese price, but at an Indian price. When I say at an Indian price, what I mean is that it can be expensive even by 30 to 40% compared to China, but the quality is of Europe. But it is cost effective by 50% when you compare it with European companies. So that's where we come in. Till aspiration is concerned, there are very big, massive companies like Driven is there, GVA is there, Castaldi is there. These are all European brands I'm talking about. Radiant from UK is there. These companies have made big for themselves in European countries. So yeah, these are the companies we really get inspired from. But again, we are not copying them, or we are not just developing anything which they are doing it. We are developing our own technology. So tomorrow, if we go to international market, and we don't want somebody to say, hey, you copied this company. No, we have not copied. We have our own identity. We have our own product design. We have our own technicality. We take a lot of time to introduce a product. We take 1 year to 2 years time. To introduce a range of product, we take so much of time because we start from design process. We sit on a sketchboard and just start sketching and how the product has to look. So the process is very tedious with us. But we know once we develop a product, that product will last for 10 to 20 years. And we'll make money out of it. Yeah.
Thank you, sir. And just
to answer your questions.
Yes, sir. Thank you so much, sir. That definitely answers. Just one quick clarification. On the railway side, you mentioned there are 1 or 2 organized players. Can you just talk about who these are?
So there is a company from Chennai called K-Light, to what I know. They are quite organized and they get a good chunk from railways. And there is a company called Evergreen in Vasai in Mumbai. They are also quite a big company, and they do quite a bit for railways. These are the 2 companies what I know.
Thank you, sir. So, I mean, in general, if I look at the lighting space, I think 2 big retail brands that at least we know about generally are like Philips and Havel, that like as end customers that we know about. So, one thing I wanted to understand is that basically, like, why does everyone not buy the Philips or Havel? For example, let's say there's an infra project, you mentioned, I think 15 crore or 13 crore for the temple. So, like, why would they just not take these off-the-shelf products from, Philips and Havel? Like, why do we have such a fragmented industry where there are, like, maybe, 20, 30, 50, 100 companies making lighting?
You need to understand one thing. So, if you see top 10 companies in India, which starts from Philips, Havel, Syska, Orient, Crompton, Bajaj, I'm taking all the names, whatever I remember, Hellonix. These are all companies which are above 500 crores. Okay, their major chunk of business comes from trade. Trade, when I say trade is B2C. So they have dealers, distributors, across India, 2,000 to 25,000 dealers across India. Their product pricing starts from 200 to 500 rupees. Okay. They are into commodity business. There is no technicality involved in it. Like for the layman, if you're making a house and if you want 4 tube lights, you'll go in the market to Lower market if you're from Bombay, or Bhagirath if you're in Delhi, and you will say, "Meko Philips ki 4 tube light dega." But there is no technicality. The only thing what they see is they have to give 1 year warranty for that product, and the product has to last for 1 year. After that, whatever happens. Okay, we don't come from commodity business. We come from technical business. Our product range starts from 1,500 to today 1 lakh rupees each, one product. So when somebody comes to us and if they are buying from us, there's a lot of technicality involved. You as a layman, you are not going to ask if Philips आपके पास ये certification है, आपने ये safety का certification लिया. You are not asking, you're buying it from a brand. With us, architects work, with us, lighting consultant work on large projects where they are looking for certain type of effect of light. Okay, the way they have envisaged it, the way they want their, whatever they have created, it should look. So lighting can make things look beautiful. So that is where we come in. So we don't supply, we design, supply, and some execute also. For large projects, we do SITC jobs now, because we take complete owners that whatever they have imagined, we are bringing it to life. If we are not bringing it to life, then they will deduct our money also. This type of bandwidth, these companies don't have it. So that's why they are not in this vertical and they are not in this industry.
Okay, sir. Thank you so much, sir. And you also mentioned 2 clarifications on what you had already mentioned. I think you said that we can potentially sustain 10 to 15% PAT margins in the future. I think you also talked about some growth number. I couldn't hear that properly. Was it 30%, 30, or any other number?
See, as I told you that I'm as a company or as an individual promoter of this company, I'm not looking for a quarter-to-quarter growth. What I'm looking for, ideally, I will look at 3 years growth. So our 3 years average growth, what we are seeing is 30 to 40% year on year. And this is what we are targeting and we are keeping in mind and we are working according to it. Yeah.
And sir, you mentioned out of 80,000 square foot manufacturing capacity, I think 40,000 is used. Do you mean to say that we have space of 80,000 and we are using 40,000, or that that complete 80,000 is built and we are at 50% capacity utilization?
Complete 80,000. So it's a complete 80,000 build-up space. We have infrastructure, as I told before also, it's ready with us. We are utilizing it right now 50% of the capacity.
Got it. So, I mean, if we have to double revenues from here, we don't require any incremental capex, but beyond that, we might have to.
That is what we are foreseeing it.
Yes, sir. Thank you so much, sir. That's all from my side, and again, thank you for the great number.
Thank you.
Thank you.
Ladies and gentlemen, in order to ensure that the management will be able to answer questions from all participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up question, please rejoin the queue. Thank you. The next question is from the line of Devesh Simali from DS Investments. Please go ahead.
Yeah, hi. Good afternoon and congratulations for a good set of numbers. I think, most of my questions have been answered, but just wanted to get your view in terms of your aspiration around the verticals that you called out as a mix 2, 3 years, 4 years out, right? The way we are hearing is that you see more infra and railway becoming larger component, and that has a different tender dynamics and all those things, right? So while your aspirations might be more heavier on that side, just wanted to get an idea that how do you see company evolving as an identity from retail heavy to this side, and what do you see as the challenges in this journey?
So challenge first is a challenge part. Challenge is execution. As I told you before, also we are not a company typically who love to trade, but the whole idea is that we understand, we learn from a vertical from trading, and then we manufacture and we sell. That's where we get our profits, and that's where we have a sort of a monopoly market. So the challenge is only time, nothing but time. Railway took us 3 years to get approval from all the three bodies, ICF, MCF, and RCF, and another 1 year to from development source to an approved source. So that 1 year is still going on. So it's a time taking process for us. That is a challenge. Till verticals are concerned, we have, if I can jot it down, we have 7 verticals. We started with retail up to 2016. We went to home, the railway, infra, IoT, and we have a trade brand called Trix. Now, home is also one area where we are really focusing hard, and we see a huge potential which is happening. Today we are opening experience centers, and our biggest challenge is to have experience center pan India, in Middle East, at least one experience center in Middle East. This is one of the biggest challenge, and we want to open at least 5 experience centers in coming 2 years time. And that's a real revenue generation for us, which can happen. Retail, we see a constant growth in retail. The big growth will come in retail if we can get brands like IKEA or Uniqlo, which are international brands, or Mercedes-Benz, where we can do European market or we can do US market for them, which can actually shake the turnovers of our company. Infra is very it's very difficult to say what happens in infra. The size of the projects are so big. The size of the project varies from 5 crores to 100 crores. We are bidding for the single inquiry of 100 crores, 120 crores to 5 crores. So infra is something where that's the reason we are bullish, but infra takes its own time. The one project realization takes roughly 6 months to 2 years. If the project is very large, it can extend to 2 to 3 years also. Railway, yes, we are very bullish in railway, and we see good growth coming for the next year. IoT and trade, we have just started. We are still very small in trade business for companies like Philips, Havels, and Cisco does. We don't see a very huge growth coming, but we are working towards this. We have invested heavily on it, and we feel it will still grow by 20 to 30%, but the numbers are very small to talk today. Till IoT is concerned, IoT is one area wherein IoT will be 20,000 crore market in India, and we have a sort of monopoly in IoT also, and it's a very disruptive technology what we have worked on. We have to capitalize on it. And that's one area where we are going slow because of so many verticals all of a sudden coming up, and we are not able to focus on it. But probably in a year's time, we'll be focusing very hard on IoT also.
Great. I think that's quite helpful. And aligned to this, right, when we sort of have this explosive growth, multiple vertical, how do you see organization structure evolving with this? Because, you will have certain bandwidth limitations, and how do you see that playing out?
See, from a journey of 3 crores to today, a journey of this 9 months is 130 crores roughly. It's itself a journey, and there are a lot of challenges where you face. There was a time wherein a simple packaging or getting a simple screw in India was a big challenge for us. Or to get a designer on board because we are a small company was a big challenge for us. So we have faced all those challenges, and we have come through those challenges. And there are dedicated team, dedicated people who are handling these verticals. And we work in a very simple way wherein once any vertical has gone to one number of turnovers, then it goes to our team. Till that time, I am personally involved with one person, we ensure that we bring it to one level and then give it to the team. And then there's a dedicated team who is working only on those verticals. For example, for railway, so we have a dedicated team. For infra, we have created a company where Focus has got 51% stake in it. And the idea is that those people are only working for infra projects. So for us, manpower today is not a challenge. Things are in place. Because it's not possible that, with 10 people in the company, if you have 10 people and they do 50 crores and same 10 people can do 200 crores or 300 crores, it's not possible. So yeah, there has to be organic growth. There has to be people who comes in as and when it is required. They have been trained according to that. And there are systems in place wherein we ensure that, we don't have those type of bottlenecks.
Got it. That's quite helpful. And the last more near-term question would be, you called out that
we have only 2 questions. Anyway, go ahead.
Yeah, but this is just connected to the previous comment you made around the railway bump up that we plan to see in 24, right? Right now we get 20% revenue and then we'll be eligible for remaining it. Do you have some range-based guideline that currently our order book is so and so, and we sort of recognize this much only, and next year potentially?
No, I'm really sorry. We don't have any order booking. Railway is all tender business, so it is on GEM portal. So every week, every day, there are some tenders coming in, and we have to bid for it, and we have to take orders. So when you are in 20% bracket, there are a lot of development companies who are under development and they fight for it. But approved sources, their margins are almost 30 to 40% more than what a development source have margins. So that is where the advantage comes. Yeah. But there are no order bookings. Railways don't give any, like, for 3 months you have to supply so and so quantity. No, it's not like that.
Fair enough. Thank you. Thanks a lot, and wish you all the best for future.
Thank you. The next question is from the line of Ankur Kumar from Alpha Capital. Please go ahead.
Hello, sir. Congrats for a very good set of numbers. So most of the questions about business have been answered, but I just wanted your opinion in terms of say railway. You are saying you look quite bullish. So any numbers you would like to throw, as in what is our current revenue coming from railway and what is our expectation going 1 year down the line in FY24?
See, once we become an approved source, the real numbers will come into picture. We are still not an approved source in railways. So we are expected that in May they will make us an approved source, and then the real turnover should start. What we are expecting for the first year, we should do 20 to 30 crores additional to, and this is the value what we will add in railways.
Sure, sir. And if I look at this quarter, Q3, December quarter, there's a big jump in the sales. So can you comment, is it like some one-off infra orders that came to us, or how should we look about the growth or sustainability of these numbers?
So, see, I've been repeating this in this meeting that typically companies like us, if you're looking at quarter to quarter, you will see a lot of ups and downs. But if you're looking at 3 years, we will have an average jump of 30%. Now, this quarter jump is purely because there are some infra projects we are executing. We executed this quarter. Okay, but same thing we are executing in current quarter also. There must be some execution might happen in after post-March also. Or it depends. So what I request investors is not to see quarter to quarter results, but to see total consolidated results of 3 years. And we are very bullish that coming 3 years, if you see the average jump will be 30%. But maybe on the second year, the jump is 100% because one large order has come, which has like changed the balance sheet, you know. So this is how we foresee it. And this is how our business is. Yeah.
Sure, sir. Thank you and all the best.
Thank you. The next question is from the line of Sachin Shetty, an individual investor. Please go ahead.
Yeah, thanks for the opportunity and congratulations for good set of numbers. Sir, just now you said that we have 6 verticals of lighting business and each business can grow 100 crore of each business. The vertical you said that railway, retail, so on. So my question is to you, how much capex we have done in this technology point of view? For the technology we have, you in your previous statement you said that we have invested a lot of money in technology. So how much capex we have done for this current year?
I don't have the figures upfront. I'm really sorry for that. Till technology is so technology investment is a process. It's a day-to-day process which we are into. Please understand, we very strongly believe the day we stop innovating, the day the growth dies. So innovation and investment is a heart of the business and we cannot run away. Sorry if you guys have misunderstood that we have already done the investment and we won't be investing. Now I've been very, very clear that we will be investing on new technologies, we'll be investing on new product designs, on new verticals. Infrastructure investment is already in place and we don't need to invest on infrastructure. But I don't have the exact figures. Probably 25-30 crores we would have invested in when we set up this factory, and it is still continuously going on. There are a lot of upgradation happened. Then for example, we went for SAP. Now we are taking 100% complete 100% computerization of our stock. So there is no manual feeding and manual removing of stock. It is computers will bring the stock down. It is like saving on human time. We realize that we waste every day 2 hours of man time only to remove next day's production from the warehouse. And today we are investing huge. We just took a decision that we want to save this 2 hours and we want to use it for manufacturing. We want to make it lean. So we are investing on a computerized system where in a computer you just feed that I need one product and complete bomb will come out 500 pieces. So the computer will take out, which saves so much of human time searching for each and every small part. Every product has got 25-30 parts. To search those 35 parts in a warehouse is a task. Bring it down is a task. So yeah, those type of innovation requires money, and those type of capex investment will come in day to day. And we as a company, we are very, very aggressive, very proactive, and we don't even think twice. There are very few companies who invest on this type of systems, but we don't shy away from it. So yes, capex investment is going to be there, and it will be regular. But currently, we don't have to borrow money. With the profitability, with the turnover, with the investment that has come in our company, we don't have to borrow it. We are able to get approvals. We are able to get money from our business itself.
Okay, thanks. And the second question is, so has there any plan to enter in the clean and flame-proof fittings? Because the clean-room fittings, which the end application is pharmaceuticals, and however, Philips, Wipro, they are the leader in this business. So what's our exactly plan for this business?
No, we have no plans to enter into clean room fixtures. There are a lot of companies doing in India, and it has become almost a commodity right now. And we don't foresee to enter into that industry as of now.
Okay.
We have enough on our plate, and those are not high value also for us.
And sir, your earlier remarks, you told that we have some patented products. So which are that patented? Because all are
Sir, I request that a lot of investors waiting to ask question, and as she requested also 2 questions at a time, that would be great, because otherwise this will be never ending. So just to answer your question, because this might be a question common for all, we don't have patents. There are companies who have invented, who have on and got patents. we have got exclusivity for India or Asia. So we invest with them on their technology. We get those technologies in India and we take exclusivity with them.
Okay. Okay. Thank you.
Thank you.
Hello.
The next question is from the line of Akshay Kothari from Envision Capital. Please go ahead.
Thanks for the opportunity. So what would be our current working capital cycle, and do we see it improving?
Current, I think Tarun, if you can answer this.
Yes, our working capital cycle is improving. As we said earlier also, that we are not utilizing any finance. As of now, we are utilizing our own money, okay, to meet up all the raw material requirements or paying up the creditors and all. So yes, definitely it is improving. And once we publish our balance sheet, you will be able to see that improvement in the balance sheet also.
Okay. As on September, what was the working capital days, or even the cash conversion cycle, if you can give a sense of that?
Yes, 1 second.
I also have a second question.
Yeah.
So in terms of employee strength, I don't know if I missed in the opening comments. So could you just highlight about something about management as well as employees? You also alluded to designers, which we were not able to get earlier when we were of small size. So now that we are big, how many designers do we have, and on that part?
Okay, so I'll answer this question. Till that time, Tarun, you can just answer the first question. So all put together, we have a roughly strength of 250 odd people. Please don't catch me on the exact numbers. This is a rough figure I'm giving, plus or minus 10 to 15%. Till design is concerned, we have designers who are exclusively working with us for product designing. We have designers, 2 designers in Germany. Sorry, now 3 designers in Germany, 1 designer in Belgium, who are working on product development with us. We are planning to have 1 more designer on board because this year we are investing very heavily on product design. We have in-house designers. We have currently 4 in-house designers who work only on product designers. We are also into electronic manufacturing, which is also a new vertical which we have started. So our dependency on outside companies goes down because every lighting product needs electronics. And if we are selling, let's say 30,000 fixtures a month, we need 30,000 electronics. And that is something that was a big outflow. So we have managed to manufacture 50% currently with us. We have 2 electronic designers. We have 2 PCB designers with us. We have 3D designers, 2 3D designers working with us. And we have a robust sales team, all put together 15 to 20 people currently working on this business. I hope I could answer this question.
Yeah, that's great. I have some more questions. I'll get back in the queue.
Thank you. The next question is from the line of Devdeep Sarkar.
Tarun, you have not answered his question. On the working capital, I think it was.
Working capital, you wanted as on September, right?
Yes, sir. Please proceed with the answer.
So working capital was 106 crores as on 30th September.
Okay, sir. Thank you. Thank you for your answer, sir. We'll take the next question from the line of Devdeep Sarkar, an individual investor. Please go ahead.
Good morning, and thank you for the great set of numbers. Am I audible? Is the line clear?
Yes.
Yeah. Very good afternoon.
I have a couple of questions. One regarding sales and marketing, and the other regarding traded goods. So I begin with, how is the business generating its sales? From the retail brands, from the auto companies mentioned before, the airports, the railway projects, how are you selling your products or services to them? Is the company executing projects like you have listed on your website, or is the company giving them individualized as per requirements?
Okay, so to make it easy and clear, every brand, I'll just take a brand, one or two brand examples so it is easy for all of us to understand. First of all, there is a approval stage. For example, Mercedes. So when we started with Mercedes, there's an approval that has to come from Germany. Their designers sitting in Germany, they have to approve our product in terms of technicality, in terms of safety, in terms of certifications, in terms of product design. So if these four elements, if we are able to, or if we are not approved in any of these elements, then we have to change it and we have to give it to them. When you go to companies like IKEA, they do factory audits. They come to our factory, they do factory audit, they see how we treat our workers. They will have one-to-one discussion with our workers. They will do audit. Not only they will do other types of audits also. So that process goes for 6 to 1 year. Once you are approved and once everything is in place, then we become a supplier to them. Then it is just a supply chain for us. So we get a planning every month, like there are 50 stores or 100 stores, like Tata Motors. We do average 900 stores a year. So every month planning comes, and then we have to just ensure that we are taking care of the logistic part. So we don't have to run for business or negotiations every week, every month, or every year. No, we don't have to do it. If there's a design change in terms of look and feel, in terms of technicality, then the whole process starts again. So once you're approved, you're on board. It's the same with railways also. Once you are approved, you supply. Infra, it is more of a spec lot. Spec lot is something like there are lighting consultants in place or architects in place. They need products which has got certain quality which other companies don't have. Everybody has got a tube light, just to give an example, but they are looking for a waterproof tube light, or they are looking for an output which is 30% more. So those in our industry we call it as spec lock. So infra works more on a spec lock. So we work on very tight specification, very high quality. So once it is spec lock, once the brand is spec, 90% end user companies will not deviate from that brand. For example, if Focus is specified, our brand is Plus Lighttech. So if Plus Lighttech is specified by the lighting consultant, they will work with us. Central Secretariat for that example. So we are specified brand. So once we are specified, but we have taken a lot of effort to get ourselves specified in terms of technicality, in terms of certificate. Once everything is specified, yeah, we are into that business.
All right. That answers my question. Yes, that was very satisfactory and very systematic. Thank you very much. I'll proceed to the second one. There are two segments dividing your revenue under the segment distribution. A portion from it is coming from trading. Is it the B2C model that you referred to earlier, or is it something different?
No, it is not B2C model. So there are certain systems which we don't manufacture, we outsource manufacturing. There are certain products, which are not high value or which we don't intend to manufacture because there is not much of technicality involved, but it's a requirement of a project. Okay, so no company in the country or in the world does 100% manufacturing or has got everything in-house, every product. There are so many requirements which we are not able to fulfill. Those requirements, we outsource it. We brand it in our name and we give it to the end user. So that comes under trading.
All right. So could you describe how these traded goods are generating a revenue? Like if you're buying a particular part that you're not willing to manufacture here, you're buying it from outside. So how are you generating revenue on it? Like, how is the revenue coming in on that segment?
So those products are designed and manufactured as per our specification. Okay, and we add our margins. Like, let's say as a company we work with 40% gross margin. We add those gross margin and
All right. I get it. I get your point. Yeah. Thank you. Thank you very much. If I have any further questions, I'll add up in the queue.
Thank you.
Thank you. The next question is from the line of Naveen from Bellwether Capital. Please go ahead.
Yeah. Thank you for the opportunity. So you spoke about different verticals. Could you give me the revenue split, say from retail, how much you get, and from infra projects?
Of the total turnover, luckily I have those figures with me, otherwise it's very difficult to understand it. But currently retail is 52% roughly. Home sector is 13.5%. Roughly infra is somewhere around 13.8. In fact, infra is divided into two. So I don't know, Tarun, if you can just help me with this.
Yeah. 1 second. Yes.
Infra is total 26%, or because you have written one 13.6 and another 13.8. So I've just made it 26%.
So 10.72 plus 3.65%, so it is 14.37%, and plus 0.66, so it is 15%.
15%. Infra is 15% right now, which is added to the turnover. And we have a vertical called tricks, which is coming to roughly 18%.
Okay. And could you also speak about the margin profile among these verticals? Approximately will do.
Okay, we'll not go into the depth of it, but retail is somewhere around, you're talking about the GP.
Yeah, gross margin.
Yeah, GP somewhere is 50% for retail. Infra is somewhere around 30%. Home is somewhere around 60-65% margin. Home and so the B&B technology we say, which is a patented one. There we have a higher margin of 60-65%. Outdoor we foresee 100% GP we have. Yeah.
And how do you see this revenue split 3 or 5 years down the line? Which segment you want to focus on, and where do you see growth coming in?
See, as a company, these are the segments we have created and we have invested in all the segments. Okay, so it's not that we will be focusing only on 2 particular segments and not other segments. Our aspiration, we see exponential growth coming from certainly from 1 or 2 verticals, but we see that most of the verticals, like in 3 years' time, this vertical should be somewhere. Our aspiration is that they should be in a range of 70 to 80 crore each vertical. Our target is 100 crore each vertical we should have. That is what our aspiration is, and which is quite possible and sustainable.
And you also spoke about exports contributing 20%. Is it done under your own brand, or you do it for somebody else?
No. It is. We don't do OEM business right now. There are a lot of companies who have approached us for OEM business. Heckley was one of them. Currently, Panasonic has come in. We are not right now interested in doing OEM business. Whatever we do it in our brand. We are very, very sensitive and emotional about our brand.
Okay. Thank you, sir. That was helpful. I have a few more questions. I'll get back in the queue.
Sure.
Thank you. The next question is from the line of Ashish Rampuria, an individual investor. Please go ahead.
Yeah, thanks for the opportunity. A couple of questions. You just mentioned 70 to 80 crores you see for each of these verticals for the next 3 years. Are you talking about the 4 verticals? Or are you talking about the 7 verticals?
We are talking about retail, home, railway, infra, IoT, and tricks. 1, 2, 3, 4, 5, 6. 6 verticals.
You're talking about 6 verticals. Okay, fair point. Okay.
Yeah.
Secondly, we earlier had a sister concern, right, where we were buying and selling. I think it was outside the company, with, I think, the promoters. Is it merged now, or is it?
It is merged. It is merged.
It is now merged. Okay, fair point. Thank you. My quick last question, I think on the railway front, right? See, I understand on the infra part, ultimately we end up dealing with L&Ts and sort of the VK GMRs of the world, to by and large still private sector entities. So there might be issues around cash flows, but by and large, we need not manage the system. From a railway perspective, do you see that as a challenge, given it's a PSU and some of the dealings might not be as transparent and so on and so forth? What has been your experience in that? How do you foresee that?
Thank you very much for this question. First of all, with private companies like GVK, GMR, L&T, they are paymasters. Their payment terms is 6 months, but they have something called L&T Finance, where they finance it. Once you supply, within 7 days, they clear the payments. We have to discount it and we get our payments cleared. Tarun, correct me if I'm wrong, if it is not 70 days or 30 days.
Yeah, absolutely right, sir.
Yeah, so they are paymasters. There's a lot of myth that Reliance is not a paymaster. Our company survives because we get our payment flat in 28 days. Okay, now coming back to railways. Railway, everything is on a GEM portal right now.
Okay.
Everything is tendered. Once your price are approved, we are supplying it. And railway, if we why we don't see cash flow crunch when it comes to this company is because railways, if you have a purchase order of railway, any bank in India will discount only railway purchase order by 98% and give us the money.
Got it. And do you think that that's a standard industry practice and that happens very easily?
That is only for railways. Railways. So if I have a infra project in hand, for example, let's say if I have an airport project in hand, banks will not discount against the purchase order. But railway, Government of India, there is I don't know what is the norm, but Government of India is a fixed mandate that against the purchase order, any bank has to discount it. 98% of the money will get it in our hands.
Got it. So you're saying for infra projects, you have the respective NBFCs paying you're sort of discounting that. And for railways, you're not worried because by and large, the banks will discount and pay you upfront. So you think cash flow will not be a problem?
No.
Got it. Very interesting point. One last question I wanted to sort of always understand this. When we say we focus on innovation, we focus on technology, right? What exactly, which part? Are you talking of special LED lights or new forms of lighting, or is it more from a design perspective?
It is a combination of everything. It is not just one element. It is not just, so it depends upon the industry to industry. For example, industry like home, we don't have to focus on efficiency. Okay. The power is not an issue because home lighting, it works from 7 to 11 or 12. Hardly any electricity consumption. Then it is more about aesthetic values. Then it is more about comfort. Then it is more about health. So we focus on these 3 parameters. Health, which very few people know that lighting can affect health also. Today, our major business, we've been becoming successful and our growth is coming in home lighting, especially because we are focusing on health. Okay. Yeah. So it depends upon purely on vertical. For example, for retail is all about, for a retailer, if he can reduce the quantity of fixtures by making fixtures more efficient, they are very happy to work with us. For a retailer, if the fixture is working for 5 years, if they don't have any problem for 5 years, they are very happy to work with us.
So our R&D innovation then focuses on these aspects. Is that what you're saying? To make sure they last long.
Again, so please understand, it depends from a vertical to vertical, in which vertical we are working. So based on those verticals, our innovation or our technology will change in whether it is a form factor, whether it is a design factor, whether it has to be more efficient, whether it has to be aesthetically beautiful. It will depend on the vertical we are working on.
Got it. One last question if I may squeeze in. You mentioned you have 80K square feet capacity and sort of space, and we're using only 40K square feet right now. So if I assume a broader 800, if you use the entire space, right? What's the maximum throughput that you can get in terms of crores from, and even a range is good from that current manufacturing facility?
Can I be very honest with you?
Yeah.
It can go against me. Yeah, उतना धंधा आएगा ना, so we'll be using all 80,000 square feet. We can reach up to 500, 600 crore. We have to generate that business.
Got it.
As a promoter, okay, one thing is very clear, that we invest money where we get returns. So normally there are a lot of investors who come and ask कि आप 40,000 में आप 200 करोड़ अभी कर लोगे, तो मतलब 80,000 में आप 500 करोड़ कर लोगे, उतना धंधा आएगा तो कर लेंगे हम. We have to generate. Yeah, we have to generate that business, and that generation of business takes a lot of effort. In our case, because we do everything from scratch.
Yeah. Noted. Thanks a lot and all the best.
Thank you.
Thank you. The next question is from the line of Devdut Sarkar, an independent investor. Please go ahead.
Hello. Thank you for the opportunity. Am I audible?
Yeah. Thank you. Come, tell me.
So this is the first time I'm doing this, and I'm trying to understand the business. So looking at the past, we know that the COVID had an impact on the company. But before COVID began, the YOY sales had dropped about 16%. What led to this? What happens in the economy that leads to such a sales contraction?
It's a cycle, right? So any business, there are cycles. Like from 2005, if you look at our company, I think the first turnover in this company was 3.5 crores. We were stagnant between 13 crores and 16 crores for 2 to 3 years. Then the growth again started. So we have every year we have a sales review meeting, and when we were 16 crores, the team said, sir, we want to do 40 crores, and I said, guys, please don't joke. Nahi hoga. And we managed to do it. Okay. Then touching after 40 crores, we were again stagnant for 1 year. Then we wanted to touch 100 crore milestone. Okay, we were 90 crore and everybody was 90 or 99 crores, and we were all disappointed. We could not touch the milestone of 100 crores. But once we touched 100 crores, we were again stagnant for 1 or 2 years. So see, we are into a project business. Okay, and I kept repeating, if you really want to look at look as an investment in focus, you have to look at long term and not short term. People who are looking for 3 months, quarter to quarter, or people who are looking for 1 year, okay, they should not invest here. And yeah, I don't know whether any promoter will talk this way, but I'm just being very honest and blunt. What we foresee is that yes, there is a growth, and average growth, minimum average growth is what we are looking for is 30%. Okay. But there will be time where we grow, like this year we are growing by 70-80%.
Yeah.
Okay, but you cannot have 70 to 80% growth for 10 years. But average 30% is, yeah, it is achievable, and we will grow. And with the same path, we will grow. There will be ups and downs in the industry, which will come. There are a lot of, like COVID, my balance sheet was in red. It was a first time experience for us, and we thought everything is negative. But we bounced back because amount of investments what we did. Okay, it was, and shifting from one vertical, when we brought our IPO in SME, somebody said that your IPO was very small and you got some 4 crore. It was a 4 crore, not 5 crore IPO. We were only a retail lighting company, and we never envisaged that we will go into so many verticals. So the dynamics of business also keeps changing. Today the dynamics have changed. Tomorrow what we have and where company will focus on also we don't know. Okay. But yes, there has been a constant growth. Our track record has been very, very good in terms of growth. Average we have given is 25-30% growth year on year. If you see our past history, and this is what we are saying, we will maintain it. And we don't want to, as a company, we don't want to jump to one turnover and then fall down or not able to sustain it. We want to go, baby steps are always better than jumping, you know. We don't want to be Adani.
Absolutely. And that answers my question. My next question would be, would you describe the business as an asset-light model?
Would we describe business as what?
As an asset-light model.
We are a lean company. Like if you look at the turnovers and the type of and the amount of investments what we have done, the ratio is nothing. It is an asset-light company. Like in terms of manpower, in terms of infrastructure, we have invested on infrastructure. Okay, because we foresee. Okay, but as such, if you see, it is an asset-light company.
Okay. Thank you so much, and wish you all the best.
Thank you. We have the next question from the line of Aditya Mehta from GK Capital. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. So just wanted to know from the current capacity that we have, how much of the maximum revenue potential is there?
Sorry, come again.
From the current capacity, what is the revenue potential that we have from 40,000 square feet that we are mentioning?
So up to 250, 300 crore, I don't see any problem. It is honestly, if you ask me, it is how we manage it, how smartly we manage it. So there are systems like, just to give you an example, we were using today at this turnover, we were almost using 40,000 square feet for warehousing. Okay, so yeah, by investing 1.5-2 crores, okay, on this computerized system, we'll be doing it in 2,000 square feet.
Okay.
Okay, so yeah, it's a very wrong perception. How smartly we want to do it, and how smartly we want to conduct our business, how innovatively we want to do it, and how whether we have the vision and whether we have the appetite to do it. So the biggest problem in our country is people shy away when they have to invest on all this. Okay, as a company, we don't shy away. We look into it. Trust me, what we are doing today, we can do it same with, if we really work efficiently and smartly, we can do it with 30 or 20,000 square feet also.
Got it. So ideally, our fixed asset turn ratio is quite high, around 15 to 20 times, we can say that.
Yeah.
Okay, and you mentioned that
today we are working in only one shift. Okay.
Okay.
We are just working in one shift. We can work in 2 shifts, and we still don't need to invest on the balance 40,000 square feet. In terms of manpower, in terms of there's so much of infrastructure cost. At the end of the day, we are working for profitability, and so what we look is we don't want to shy away from investing on systems, on infrastructure, which can actually help us to keep ourselves lean. Okay, it's very we can be very proud to say, okay, we have a manpower of 500 or 1,000 people, but can we say that the same thing what 1,000 people can do, we can do it with 150 or 200 people? That is the whole idea and target. Running cost people don't see. Yeah, and we have been successful because we were able to save for companies' running cost. OPEX is something which companies shy away with.
Okay. And my second question is, you mentioned that 70 to 80 crores from every 6 vertical from within next 3 years. So are we looking at 500 to 600 crores of turnover next 3 years?
If those total comes to that figure, yes, we are looking at it.
Okay. That's it from my side. Thank you, sir. All the best to you.
Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to Mr. Vastupal Shah for closing comments. Over to you, sir.
Thank you. Thank you for joining the conference call of Focus Lighting and Fixtures Limited. If you have any queries, you can write us at research@kirinadvisors.com. Once more, many thanks to management team and participants for joining the call. Thank you.
Thank you so much.
Thank you.
Thank you.
Thank you, sir. On behalf of Kirin Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank